Well, the American dollar is on the run, getting beaten into the ground as Washington dithers about the country's future. Investors, meanwhile, continue to find a safe haven in gold. Check out this chart. Gold versus the dollar. Gold continues its epic march, holding over $1,600 an ounce, hitting a record earlier this week, while the dollar is lower against all its major trading partners, all the major world currencies. Can King Dollar, if you will, return? Or will the fear factor push gold up even higher? Joining us now to discuss, Peter Schiff, CEO of Euro Pacific Precious Metals and author of How an Economy Grows and Why It Crashes, and the chart man himself, Gary B. Smith. Gary, Peter, welcome, gentlemen. Gary, let's begin with you. So talk about this relationship between gold and the dollar. I mean, it's really just a clear signal that Americans are seeking out the safe haven. Even though markets are relatively calm, we're not seeing a panic move yet. People are still holding on to that gold.
Well, I think you summed it up almost perfectly. I think, you know, the weakness of the dollar is basically a reflection of lack of faith that, you know, our economy is under control. And conversely, the strength in gold, I've always thought, was a reflection in the fact that people think all things are going to hell, if you will, and it's really almost a fear index. So, you know, I think people that ride gold, like Peter, are banking on that. I think that's great. That's never been the play for me, other than from a technical perspective, and it's had great momentum for years and years. All
right, Peter, so famously bullish on gold. What's your outlook? How high can gold rise?
Well, how low can the dollar fall? There's no floor to the dollar, so there's no ceiling to gold. You know, I've been buying gold, as Gary knows, for many, many years. In fact, I think I started advocating it on Fox when it was still under 500. But the reason I'm buying gold, and I'm still buying it, it's not because I'm afraid that, you know, Congress is not going to raise the debt ceiling. I'm confident that they're going to raise it. That's exactly why I'm buying it.
Right.
Because I know that we're going to default. It's only a question of time and how. But I don't believe our leaders are honest enough to admit that American taxpayers cannot keep the promises they've made. They're going to call on Ben Bernanke to monetize the debt, whether they want to call it QE3 or whatever it's going to be, but they're going to raise the debt ceiling, they're going to keep on printing, and the dollar is going to keep on falling, gold's going to rise, and one day the world is going to wake up one day soon, and the dollar will cease to be the reserve currency. The Chinese aren't going to hoard it anymore, the Saudis, the Japanese, and then the dollar is going to tank, and gold prices are going to soar.
Now, Gary, do you agree with that outlook by Peter on the dollar? Because really the dollar, despite its troubles, seems to be less bad, if you will, the best of the worst. I mean, look what's going on in Europe right now, right? That takes center stage with their debt crisis.
Well, I do. I mean, you know, Peter kind of paints a little bit of an Armageddon situation. But look, I'll grant the man that he has been right. And current course and speed, it does look that way. I guess I'm a little bit more optimistic, we'll call it, that, you know, the country can turn things around, especially, you know, not in the next few months. I think Peter's right. I think the debt, you know, will raise, and, you know, our situation will still look pretty lousy. You know, it looks like we won't be able to pay our bills. Hopefully, things will get turned around just like they have, you know, in other states like Finland and Canada and things like that, where things look pretty grim, and they turn things around by not raising taxes and by cutting their spending. So can the dollar return to strength? I think it can.
And interest rates, Peter, are still low, so if that's a fear factor indicator, markets aren't there yet.
Well, interest rates, unfortunately, have to move a lot higher. That's part of the solution to our problems, is higher rates. But unfortunately, this phony bubble economy that we've inflated can't survive higher rates. So that's the rock and a hard place that we're between. But, you know, I don't think the dollar is the best of a bad situation. I think that the euro has problems, but the dollar has more. I think the yen has problems, but the dollar has more. That's why the dollar's at a record low today against the yen. That's why the dollar is falling against the euro, despite all the European problems. But look at it against the Swiss franc today, record low. Look at it against the New Zealand dollar, record low. I mean, the dollar is falling out of bed. The only reason it hasn't collapsed is because people have been worried about Europe, and they have been temporarily you know, distracted from the real problems in the United States. But I think they're putting a Band-Aid on those problems in Europe. I don't think it's a long-term fix, but it's going to appease the markets in the short run, and the markets are going to now focus on the greater risks in the United States, and that is a big negative for the dollar and for our bond market, even if we do raise the debt ceiling. And what we do, we're going to have a real crisis before we do the right thing. And other countries in the world have been to the edge of the abyss and have done the right thing. but they will never do it until there is a real crisis. And we're not going to act until we have a currency crisis. And, you know, right now we're talking about not raising our debt ceiling.
I want to let Gary have the last word here.
When the lenders won't lend anymore.
You know, well, Peter said something interesting, Gary, and that was that rates have to go up for us to get out of this situation. I think everybody's been talking about a spike up, a quick and dirty rise, but we do want to see some inflation, no?
No.
Well, I don't think we want to see inflation, but I do think rates will rise. I mean, they're at zero. They can't go down any further, essentially, so they're going to rise. But I do take issue with one thing Peter said, and I guess I'll close with this since we're near the end. He said we need a crisis. I don't think so. You know, we've raised the debt ceiling so many times, hundreds of times over the years, and no one has ever brought up spending until this time. We really have, we're not at the abyss right now, and yet we're at the point where at least we're trying to raise the debt ceiling in with increased spending. So I think that's a positive step that no one had anticipated.
Okay,
I don't say we need a crisis. Unfortunately, we're going to get one because that's what it's going to take for our leaders to do the right thing, because right now all they care about is getting reelected.
Okay, fair enough. By the way, my comment about a little inflation, just to inflate the debt away to essentially, you know where I was going with that. All right. Okay, Chartman Gary B. Smith,
just
Peter
try
Schiff.
getting a little bit pregnant. See how that works.
Don't start rumors about me, Peter. I know we're on a weekly date here with our chats.
But that's what they want to do. That's why we're buying gold.
Okay, guys, thanks a lot.
It's not too late.
Back to the panel.